Welcome to Financial Freedom with the Flipping Flanagans, where we help real estate agents and already successful business professionals create legacy wealth through real estate. We go by the Flipping Flanagans, and we don't actually flip houses very often. When you drop the F bomb a little too often, add that to a real estate background, you get the Flipping Flanagans. We actually buy property to hold and see long term gains protected from inflation while seeing amazing benefits from appreciation and depreciation. See you on the other side. All right, welcome back, everybody. Today I have a really exciting guest. I have been following Jayde Gorling on Facebook for some time. We were actually introduced by a mutual contact, and so I've been stalking her social media, and I really love her very direct post. And so I got really excited and asked her to be on our podcast today. So I hope you guys will get some great knowledge out of this interview. So Jayde, thank you so much for coming on the show. I really appreciate it. And if you don't mind just giving a quick brief bio about yourself.
Sure. So I'll tell you guys a little bit of background on me. So I had originally started a real estate marketing company quite a few years ago, back in 2018. The whole intent behind that was to always become a real estate investor. I had owned a couple rental properties prior to that, and I really wanted to get into estate investing for the obvious benefits of doing it. So started that agency, have been running that for quite some time now. And then in the last year or so, we've started to shift some of our focus to real estate investing, simply because we've grown our company, we've automated it, we've built systems for it. So we've been able to shift our focus a little bit, let that company run itself, and get more into real estate investing, which has been, I guess, a passion of ours for quite some time now. So it's been kind of cool. In the last year, I guess a year and a bit, we've closed on 45 rental properties, and right now we have another 30 that are under contract. So we've been very busy with doing that, and
yeah,
that's a little bit about me.
That's amazing. So Jayde really aligns with our strategy, because we were talking a little bit before we hopped on the show today, and we believe in holding real estate long term and versus doing the flips and really just seeing that quick cash flow infusion from a flip. And Jayde, kind of talk about why you feel that strategy is really important.
So the main reason why we like to do that is because, I mean, there's a few things that go with it. So we do everything remote. So I'm Canadian, and we buy all of our property in the States. And so to do fix and flips doesn't make a lot of sense for us, simply because we can't manage it. The other thing too is you fix it, you flip it, you make your money one time, and then that's it. There's a significant amount of risk, especially with like the economy being the way that it is right now. Everything's kind of up and down. So it's a lot too much risk that I would want to take on for somewhere that I can't be, and for making incremental amounts of money. Whereas if you own a rental property, you can hold that property, make rents off of it, and then you can also kind of gauge the curve. If the real estate market is down, obviously I'm not trying to sell real estate, I'm holding it so I can make rents on it. And then if I do need to sell at a later date, I can hold it, rent it, and then make money on that curve while it's going up, because none of us can predict markets. So that's the real idea why we would rather do rentals instead of just flips, because it's quick money versus long-term money.
Yes. Oh my gosh, I love it. So Jayde, I have to comment on one of your posts recently, and I hope that's okay. I mean, it's a post, so you were intending for people to view it. Right. But she had made a comment about how hard it is to get real estate agents to give the information that the client is desiring. And so I have a lot of real estate agents who listen to our podcast, and the goal is to build wealth through real estate. And so, as knowing that I have a lot of sales professionals listening, I just want to get your feedback. When you're interviewing a real estate agent, or you're looking for a real estate agent in the markets that you're shopping, what do you think is the number one thing you could give somebody as advice to really work with you, or work with somebody like you?
I'd say it's a function of a couple things. So the number one thing I would say is answering your phone or calling someone back. The second thing I would say is actually closing that loop with that customer, so that, for me, it's like, okay, you'll end the conversation and it's like, okay, I'm going to send you a home evaluation. I'm going to send you whatever piece of information, but it's left open-ended. So it's like, hey, I'm going to send you this home evaluation. There's no date, there's no time, there's no follow-up, there's no nothing. And so all of a sudden it's like, was that person ever getting back to me? Like, do I know what I'm actually doing? Whereas when I'm working with an agent that I guess would be more sophisticated, they close that loop right away. Okay, I'm going to get you the home evaluation by this time. Let's schedule another meeting for this time. That's when we'll go through it. We can talk a little bit more about the CMA, whatever. That would probably be the next biggest thing. And then in terms of what I always look for is I look for someone, how fast are they actually getting back to me? Because that's a huge thing. For me, if they're getting back to me right away, if I go online, I fill out a form and I'm looking for someone in a local area to help me out, I want to go with one of the first people that's contacting me because they have that speed to lead. If somebody waits a week to get back to me, chances are I am going to perceive that that agent is going to approach the entire process with the same amount of tenacity. If they're not being quick, if they're not being tenacious about it, chances are I'm not going to trust to do business with them. So those are probably
Right.
the biggest things, is actually following up, having that speed to lead, and then closing that loop so I know and can anticipate when our next steps are, what they are, and it's very clearly outlined. So I would say, and that's probably from somebody who works with online leads all the time. I've had to build my own process, and now I kind of want that reflection to also have, I don't know, the people I work with to also be able to reflect what I'm also doing in my business.
Absolutely. It's so funny. So I recently, we bought a house in Arizona, and we kind of split our time between Omaha, Colorado, and Arizona. We bounced around between 3 houses, and I found this flip opportunity and online, and not flip, rental, but it was like it needed to be flipped before you could rent it out. So I say flip, which means fix it up and rent it. But found this house. I reached out to 3 agents. Not one responded to me. I did get 2 people to say, I'll look it up and get back to you. Sunday night, I finally reached out to another agent. He did end up getting back to me right away. Well, not right away, but within a few hours. And he's like, oh, it's pending. It went pending yesterday. And so in this market, it's really, really hard. You can't do that. You have to be very quick in this market. And if you can't be really quick, you need to have somebody on your team who is. So, and that's what I train my team in Omaha. Like, if I can't respond to a lead, I'm immediately screenshotting that. I'm sending it to my team, and somebody is going to reach out to that lead immediately. Now, what's wild about that is I jokingly said, I will have my real estate license in Arizona before some of these people ever respond to me. That happened. So I'm now licensed in Arizona. We've actually bought multiple properties here, and it's just crazy because had that one person or 2 person or 3rd person actually responded to me, I probably would have, me and my husband would have bought multiple properties with them. And it probably would have delayed me being competition in the market because I wouldn't have been as motivated to get my license. I was motivated to get my license here because I needed to be able to access the information.
Right.
So, and do you feel like that? Like, what's the information then that you're looking for generally when you're looking at properties?
So generally there's like a few things. So for me right now, like I have a few rental properties that are in Canada that, just the way the Canadian market is, some of them I'm looking to get rid of at this point. So for me, it's like I'm looking for a home evaluation. And if I'm looking for a home evaluation on that house, a lot of times I get agents that they're like, well, you're not that serious about selling. It's like, well, it's not that I'm not serious about selling my house. It's that I want to know roughly what is this house worth. So does it make sense for me to sell it right now, especially because I'm picking up assets in the States. So it's like, if it makes sense for me to sell, I'm going to sell. And a lot of times what ends up happening is I get these agents that they don't even get me a home evaluation, or they get me one that the range is so broad that it's like, you have a $200,000 gap on a house that's roughly around $500,000. That's a pretty big gap. So I don't really know. So I think a lot of times what happens is the information that I'm trying to get, it's like they either won't give it to me because they think that my intent is low, where it's like, well, if my house is worth it, I'm going to sell it. And then the other thing is that they're not getting me information with any sort of accuracy. They're not even finding me comps that are relatively similar to the house. It's like, here's some random houses, going to throw this together quickly. They're not in the same area. They're not the same square footage. They're not even like, a lot of my houses are up down duplexes. They're not even in the same like category of types of houses. And I'm like, why be lazy about this approach of doing things? So that's something that I find is like, when I'm trying to find an agent, they're not giving me the information that I want because they're like, this isn't a quick enough sale. I'm like,
so my recent boot camp, and I didn't overly advertise this or anything. It was a very organically created boot camp. And that's really what it was. We were talking about how to provide excellent customer service so that you create your own global economy as a real estate agent. And so when you mentioned that just now, nobody teaches this, I don't think, in real estate, but like researching, presenting the information, and closing the client. And if we could all learn how to do that better, our businesses would be flourishing with no question. And
Oh, yeah.
instead, agents are on that quick, especially in this market, because you can, you list a house and it sells in 2 seconds. But in my opinion, I'd be begging for, I'd be like, all right, can I get in the house tomorrow? I'd love to look at it to see what updates you've made. If there's a tenant in it, do you have recent pictures? Like,
Mhm.
ask some questions to find out the information so that, okay, and if it's a duplex, people aren't looking for duplexes in the same neighborhood. They're looking for duplexes all across the market. So finding similar neighborhoods, even if they are a little further away, but explaining why you use those comps is super important. And then closing. Okay, so if, I think we could get it on the market by X date, and creating a timeline. And that's what I do really well, is creating a timeline for my clients. July is not my favorite month to list houses in. I'm very open about that in Omaha. So, hey, we've got some time. Let's list it in August. It's going to net you, depending on the house, $10,000 to $20,000 more if we just wait a month. Does that sound reasonable to you for a timeline? And it's like, really, if you can provide the education, again, research the property or research whatever you're trying to communicate, then articulate it and present it the right way, you're going to close the client naturally, because you've created a global effect for them where you are the only resource. Nobody else, and you can attest to this, Jade, nobody else is providing that information.
It's such a simple thing. And it's like, we're in so many markets and we need things. We always want things quickly. We're very like impulsive people. We move fast. So it's like, we'll call a bunch of real estate agents, and 9 times out of 10, in fact, I would say even more than 9 times out of 10, 9.9 times out of 10, we always end up using the first agent that we talk to, because it's like the first agent that we talk to is usually the agent that's willing to go onto site. They're willing to go that extra mile. And sometimes they're not getting a sale immediately. Sometimes it's like, yeah, I need you to go look at this house. Like, I'm in Canada. Do you mind going and looking at it? And it's like, most people are like, you're in Canada. Like, no, this just seems too weird. And it's like, the person who actually goes and does that extra mile, they don't see us as like, oh, this isn't a get rich quick transaction. But it's like, hey, you're going to have to put into some work for this. We're not going to be there. Like, you have to do some of these things. And a lot of times people look at that and they're like, no, this just doesn't seem like I'm going to get paid instantly on this. So I'm not willing to do it. And it's like, if you go to site and you look at the property, like you're going to be the person we work with.
And so I always tell agents too, I'm like, that first showing is your interview. You didn't get the job yet.
Yeah.
So like, when the phone call wasn't the interview. The interview was you going on site and presenting yourself, and how did you show up, and how did you communicate with the client throughout the process, and then asking, hey, if I would love to continue working with you. And some agents, they're like, well, investors bounce around. Well, if you can create enough value for the investor, my investors don't bounce around anymore. And if there's a property, they send it to me, but I'm sending them a detailed report on every property. And now I can tell you, all the investors I work with used to have multiple agents. And if I don't answer my phone, I highly expect them to go to the next agent, because that's my fault. But if I'm answering my phone and I'm providing a continuous value proposition for them, there's no reason that they wouldn't feel loyal to me, and vice versa. And I'm always and then when you create that loyalty, it's a mutual thing. If I have a property that's a great deal, and Jade called me, worked with me, and she's now bought multiple properties with me, who do you think I'm going to call? Like, I get a property, she's first on my list. And so you create this relationship. And again, that one showing can turn into, you have no idea how many sales. And especially if you're helping grow their portfolio, if you bring them, like, I can guarantee Jade would, if you were in one of her markets that she's purchasing in and you brought her a deal right now, even if she didn't call you to show a house, you'd probably buy it, right? If it was a really great deal and it was going to make you money.
Yeah, exactly.
And I would too. Like, if you, right now, anyone listening to this podcast, like, I'm happy to pay another real estate agent a commission. Bring me a deal and we'll buy it. Like, as long as it makes sense. And now you're going above and beyond, and now you're creating your own paycheck, because now you get to bring the deal, the person closes on it. And it's not you waiting for the client to call you. It's you finding the opportunity and bringing it to the client. And now you've solidified that relationship.
Exactly. So, and it's kind of funny you say that too, because it's like, for all of our houses that we've bought in our portfolio, I've only used a real estate agent once, because we usually find a lot of our own deals ourselves, which is fine. But the irony in all of that is that if agents were bringing us these houses or these portfolios or whatever, we would look at them. And the funny thing is I have a bunch of real estate agents that I have on Facebook, and I know the markets that they're in. And I'm like, if you get deals in these markets, send them to me. I've had one person send me one deal, which is so funny to me, because it's like, I don't even think of real estate on the buyer side, me as a buyer, because it's like, well, I've never had anything actually sent to me in any of the markets that we're in, despite even having relationships with some of those people. And the other funny thing is like, there's a market where we have, I don't, how to 14 plus 17, whatever that works out to, 31 houses. We have 31 houses in one market. And right now we are unloading some of those. And the funny thing is if a real estate agent just answers their phone, it's like, hey, I'm selling this house right now. If a real estate agent picks up and sells that one house that we are trying to sell, we have a bunch of them that we actually are looking to, we don't normally flip, but just because it's the size of the portfolio, there's some of them that we are trying to unload. It's like they could get 10 sales out of that, but they're looking at it, oh, it's this one house, it's not really worth that much money, it's not that big of a commission. Trying to get someone to answer the phone is incredibly challenging. And it's like, well, we have like 10 other houses that we're trying to get rid of right now. So if they just pick up their phone that one time. But then the other thing is okay, we're obviously investing in that market. We own a significant amount of houses there. If they find other deals, they can bring those to us. But the irony is no one ever brings us any of these deals. So it's kind of funny that you bring that up, because I'm always thinking about it from the seller's perspective, but it's like, as a buyer, I'm always looking for deals. So it's kind of funny that you bring that, because that never happens for me. And I have so many real estate agents, not only in my network, but on my Facebook, like everywhere. They know I do real estate investing. So it's funny that I get very few deals sent my way.
It is crazy. And I don't know if we all have to be a little bit more open-minded and realize that, especially as an investor, we're business people. We're not like, our feelings and stuff aren't involved like a normal real estate transaction. So honestly, like, we look at the numbers, and if the numbers make sense, we're going to move forward. And what I think is, like, as real estate agents, we almost turn everything into like personal. Oh, if I call them, they don't want to work with me, or they don't, blah, blah, blah. And they, like, you build yourself up. Mm-hmm. When investors, what I love about working with investors, and yes, the price point is lower. I will say, of course, it's $500,000 house doing the same amount of work as $100,000 house. Of course, the paycheck is nicer, but I have to deal with all the homeowners' emotions. I have to deal with making them, having them pack, making sure that they're okay. Why do you need me to put that picture away while I'm showing the house, and having all those conversations, which I do love doing that. I also love being able to go on my own time to a vacant investment property, take a video, tell the investor everything that I think is wrong with it and that it could need, how much I think that is going to cost them, and going home and writing that, and having my assistant write an offer. Like, for me, that I get so much. And it's like, if they say, nope, it doesn't work in my numbers, no problem. Nobody's offended. No feelings are hurt. There's nothing personal. But most of the time they're like, yeah, write the offer. And then the only thing that I find is hard is investors are busy. Usually they're business people. They run businesses. This is a side thing. And so it's like figuring out how to get them to sign paperwork fastest is really what's, hey, I sent you the docs, whatever. And I've even gone as far as like getting a temporary POA for my investors. Like, hey, can I sign on your behalf? And if you end up looking at the property, you don't love it, I'll buy it. That's how confident I am when I'm writing offers for my investors. So it really is like a win-win. And luckily I've never had to actually go forward with doing that. They've always bought the house and it's always worked out really well for them. But generally speaking, it's really understanding that they're busy. They're not ignoring you. They're busy. And so it's okay, in my opinion, and like following up. Hey, I noticed you didn't sign that. It's not that you don't want the house anymore, because you probably do. It's probably that you either didn't see the email right away. And I don't know if this is the case with you, but it's more like, okay, like chasing the paperwork might be the most difficult part of working with an investor, in my opinion. So
yeah, that's probably us too, because we have 4 partners in our business too. So it's like getting everyone to sign off on something, getting everyone to see something. So like sometimes I'll have people send me deals and it's like it has to go through so many hands. It's like usually I'm like I don't know, I guess the first person, because I probably have the biggest network. So I got wholesalers and stuff that are always sending me deals, but it's like I have to send it to the first person, which essentially it's like I'm the first gatekeeper, because I'm not necessarily the most analytical person when it comes to this. I'm more of the network type of person.
yes.
So then I send it to like my first level partner, where he kind of looks at it and he's like, okay, if this seems like a good deal, then we send it to our next partner. So it's like it has to go through so many hands. So it's like when it comes to like signing documents and stuff, unless it's something where it's like we got to get this done, it takes us a longer time than we would like, but we're
Yeah.
busy. And each one of us has different like sub businesses. So it's like we have a million things going on. So it's like
Yep.
by the time we get to something, it's usually not quick. But if somebody reminds me and they're like, hey, I need you to sign this document, then it's like, oh yeah, okay, I'll get to it. Thanks for
Yes.
following up.
Yeah. So you're not offended when they bother, ask you.
No, I
Which
usually
is,
need it because I'm such a procrastinator that it's like, oh, thanks for reminding me. Or else
yes.
it's like I get bogged down. It's like I look at my Facebook inbox or my email. It's like I get spammed from everyone and their dog just because I'm out there on a million different platforms
Yep.
right now. So it's like I'll get an email and it'll go right into my inbox, not even into junk, but it's like by the time I actually get to it, it's like I'm getting that reminder that says this was sent 5 days ago. Do you want to look at it?
Yes. Do you want to respond?
Yeah.
So we always resend the docs. I'm like, okay, they haven't signed, just resend the doc because then they'll know that they haven't signed them and I'll send them a text. And then usually it all gets signed, but it's kind of funny. It's a different process. And whereas, when you're working with a homeowner that's living in the property, they're usually anxiously awaiting
Oh
and
yeah.
like ready to review everything. So it's the opposite. It's like, hey, I didn't get that email yet. Did you send it? And you're like, I'm trying. You're like trying to type it as quick as you can. It's like been like 7 minutes since you left the listing appointment. But it's like I leave my listing appointments and I call my assistant. I'm like, hey, we're good. Prep the docs and send them out. So usually by the time I get home, they are in their inbox and I can go answer questions. And I'm still in the realm of leaving that appointment. But it's a different clientele.
Oh yeah.
And like you said, you're not the analytical one, and that's like me and my husband. I usually find the deal or get people bring me the deal, and then he actually analyzes it, and he's like, "Hey, Jamie, you forgot about this." FYI, these HOA dues are, this is going to affect the cash flow. Okay, so but together we've purchased I mean a lot of real estate, so it's worked out well. And for those, and again, I find a lot of my own deals. However, if somebody brought me a deal, we would buy it and happily pay them a commission. If we're going to, we don't care about the commission. We care about the financials on our portfolio.
Exactly. And I think that's one thing that people overlook because they think like every single real estate investor out there is a wholesaler or someone
Right.
who has to get it at a certain amount in order to make money. And it's like, for us, that's not necessarily always going to be the case because it's like, well, no, if this is a good cap rate, like we're going to buy it. I mean, bonus if we can get it at like say tax assessed value or whatever, and there's built-in
Right.
equity, that's great, but that's not necessarily always going to be our strategy. Like any of our Canadian properties that we have, because Zach and I just manage them ourselves and we don't have a team on those ones, it's like we typically are buying more expensive rentals. We're usually buying new ones because they're easier to manage.
Yep.
We're more concerned with the cap rate than anything, and we're not looking for built-in equity. In fact, we're paying a premium on a lot of those properties. And so it's funny because like I do talk to people like in Canada about those properties being like, oh, if you have like an up down newer duplex, like that's kind of what we're interested in. No one ever sends them to me because they're like, oh, you're a real estate investor, you're always looking to get a deal. It's like I'm only looking to get a deal if I'm looking to satisfy investor requirements. But if it's me buying it, it's a completely different story, right? Because I'm willing to, like my one property that I have that was my old house, it's like I have no intention of ever selling that particular house ever in the near future, simply because it's a good house to fall back on, right? So it's like if I ever decide that I want to move to the States, if I ever decide that, it's always good to have that house or the house that I'm living in, which will eventually be a rental property as well. So it's like there's certain houses that I'm not really worried about making a quick dime in the next year on, right?
Yeah, and talking about that too is the appreciation in neighborhoods that you are paying a premium for is usually offsets the getting a deal in a neighborhood that doesn't appreciate well.
Oh, yeah.
There's so many factors to look at, and yes, and there are investors out there that are just looking for the deal and cash flow, and those houses aren't appreciating. So they're, some of the houses I've seen some you see the wholesalers and the investors in Facebook groups, and it's like I'll see some of these properties that actually go down in value. Like you bought it because it was $50,000. You got rent for $1,000. You never did anything to it. And you actually now are offloading it, trying to offload it for less than you purchased it for. Like that didn't satisfy the global effect of what real estate investing really allows people to do. Like appreciation is a big, big part of, and again, what you said, like the paying a little bit of a premium is okay because there's other benefits.
Yeah,
And
exactly.
as an agent, looking at all of those benefits is really important. And the better you can do that, the higher you're going to have your close ratio with investors who are going to buy multiple properties. And I was going to say something else on that. Oh, so you mentioned one of them is your personal home. Was your personal home. So is one thing I always get asked is how to get financing and how to invest in your very first rental property. So what advice would you say on that?
So the advice I would probably give on that is, well, I guess, so there's two parts to this. So my first rental properties that I've ever owned have always been my primary residence, lower down payment for it, tax benefits. There's a million benefits to it. So my first house that I ever had it was in like terrible area. It was like $100,000 house. It was 600 square feet. Tiny little thing. We basically renovated it, lived in it for we lived in it for quite a while. I want to say like 5 years, and then moved out of that and moved to a primary residence. My partner and I at that time, we ended up separating. But then I did it again. The next house that I bought was an up down duplex. Lived in that house because I could put 5% down, rent out the basement and house hack. Now I rent out that entire house. Then I moved to a different place in Canada, to Alberta, bought this house, that I'm in today. And eventually it'll be a rental property because I was able to put 5% down, tax benefits, all of those things. Yep. So it's like, that's kind of one of my strategies here, because obviously getting financing in Canada is more difficult than it is in the States, in my opinion anyways. So that's a way that you can take advantage of a few different ways of doing things, by house hacking, by buying a house that isn't necessarily in the most desirable area and knowing I'm not necessarily going to live in this house forever. I am going to renovate it, fix it up, live in it, take advantage of that, eventually rent that house out, or do the up down duplex type of thing where you live in one part of it, rent it out. Or this house, this is just a single family home, but intent is it's like, we kind of live in a tourist type of town. So the amount of rent that we can get for this house eventually will be insane. So that was kind of our strategy that was kind of why we moved here, because we're like, this is a good real estate opportunity. And that's kind of how we always look at things.
Yeah. So I love that. Primary residence is like where it's at. And when I work with new clients that are, they have that real estate investing in the back of their head, but they're looking at like their move up home, I'm always like, of course I make a commission if I sell your home, but let's look at what it looks like if you rented this out. And we really have those conversations. And, a lot of agents are probably like, oh, you just lost yourself a listing, but I gained myself a lifelong client. And hopefully if what I tell them is accurate, they're going to do it over and over again. And the primary residence, it's just the loans that are available, the interest rate and the down payment. It's a no-brainer.
Oh yeah, it makes a huge amount of sense. And I think one of the problems too is like, I don't know if it's like a generational thing, but it's like a lot of people, they have this whole mindset that, oh, I need to get into my forever home. It's like this big thing, forever home, dream home, whatever. And it's like, if we take that approach differently, and it's like, let's stop looking at real estate as though like, as a comfort thing. Let's look at it as an investment opportunity. It's like, okay, if you're 21 years old or 23, whatever, say you just got a decent paying job, you're working full time for the first time. You don't need to have this goal of having a $500,000 house. We need to like reset our expectations and say, I need a starter home that I can live in, I can fix it up, whatever, because that's what a lot of us did back in the, early 2000s when we were buying houses. It was like, we didn't have this idea that we all had to have brand new houses in nice areas. We had this idea that I'm just going to enter the real estate market where I can enter
however I can.
Exactly. And so I think that that's like something that we're seeing, like kind of a generational, like kind of change with like younger millennials and Gen Zs. They're like, no, I need to be in a brand new house. It has to meet all these requirements. It's like, no, live in the hood for a little, just have a crappier house for a little while and be okay with it. Fix it up, do what you need to do. And then get to your next house. And it's like, okay, what's the next level? It's going to be a little bit nicer than that one, but don't have this expectation that at 25 or 27 years old, you're all of a sudden going to have this immaculate house. And then 5 years later, do it again and just keep building up. So that eventually you do have that dream house, but you have all of these cash flowing assets that are paying you every single month. And I don't know, I think that's one thing that like when everyone my age was buying houses, that was kind of how we approached things. And now it's very different. Everyone wants to start at the best point. And I'm like, how?
Keeping up with the Joneses. And that doesn't actually win.
Exactly.
And everyone who I've talked to even lately, it's interesting because me and Brad, like we lived in our starter home and then rented that out. And then we bought in a couple other properties and similar, like we ended up buying the property that maybe wasn't like, it wasn't comfort. It was a little uncomfortable. I mean, 4 people in a 2-bedroom house wasn't ideal, but like that's been a property that has been the bridge to so many other opportunities. And we still own that home today, and we'll, again, same thing, we'll own it forever. And now they see like what we've built, and it's like, well, we don't have, it's funny, like people say, we don't have the Flanagan money. Well, we were broke when we started doing this, and I've been talking broke. Like
Right.
we didn't have anything. Like, it's just crazy. We made a decision. It was just one very small decision, in my opinion, like buying this property, and then it snowballs. And yes, we've been made smart decisions along the way, and we've got some bad investments. We didn't know they were bad. They turned out to be bad. We sell them and you move on. And
Exactly.
Sierra on my team recently mentioned that. She's like, it's really cool that when you guys buy a house, if it doesn't work out, you guys are willing to just move forward without like too much thought. And it's like, there's no point in like draining your energy over something, especially where we're at now. And you, like you said, I'm selling a few of these houses because it just makes sense. And there's a point where it's more of a lifestyle thing. Like, this doesn't bring, it's like what, I don't remember what her name is, but if it doesn't bring me joy, now rentals are work, they're work, but there will be properties that are more work, and you have to balance that out. Is it worth the headache for what I'm getting? And if it's not, you can sell it and move on, and don't let that discourage you from the next one.
Exactly. Yeah, I think that's really important as well. Like, not taking like an emotional stance to it, right? It's like with some of these houses, it's like we bought them in like blocks of portfolios, and it's like, well, this house is going to take too much money to renovate, to rent it out, so let's just get rid of it. This house, I don't know, let's just get rid of it. So it's like we don't take an emotional stance. It's like, oh, that house wasn't really necessarily the best deal for us.
Right.
So like, let's just unload it. We don't take an emotional approach where it's like, oh my God, we bought this house and it needs all these renovations and this is going to be such a headache. It's like, we look at everything like very like binary, very black and white. It's like, is this a good investment? No. Do we want to be with this property? No. And it's kind of just like cost benefit analysis. Okay, get rid of it. We don't sit there thinking about it, losing sleep over it, being like, this is such a massive deal. It's like, no, it is what it is.
Yep. Yeah. Well, this was awesome. I think we're going to have a mini series and dig into some more of these topics, because we mentioned that before the podcast. But thank you so much for being on today. It was really, really awesome to actually get to have a conversation with you versus just over Facebook. So I appreciate that. And we will definitely have you back on the show.
Awesome. Thanks for having me.
Thank you so much for listening to today's episode. We hope you'll hit that subscribe button to stay in touch. Also, join our Facebook group at Building Legacy Wealth Through Real Estate to find out more about what we do and what we offer. Thanks so much, and we'll see you next time.